This conference will now be recorded.
We are now recording.
Professor
Okay.
Boyd, quick question.
Yes,
The bad debt is always times the 10%, correct? Or in this case?
correct. In this case, it's always 10 to 10%. Okay, so let's move to the production budget. And let's just see. I'm going to begin to give this the rest of this problem to various people. So Terrell, you want to run up the production budget?
So I'm sorry?
Production budget.
Do I can do it, yeah.
Okay. So Angela, you'll take the ink. I think that's what we have.
Okay.
And let's see. Rabinski, you take the labor. And so Drew, you'll have administrative overhead. I meant manufacturing overhead. Dash, you'll have selling expenses. And let's see, Abu, you come back to administrative expenses. Okay, so let's begin to look at these and what we're trying to do. So we've done the top part of the cash budget, and we know how much money is coming in. We now got to come in and determine how much money is going back to see if we have enough money. We have 111,840, and so we're just going to go and put numbers in here to see how much money we got to pay versus what we have, to see if we need to have a plan in place to borrow money. So you personally would be doing this. Okay. So, and the starting point on this is to do the production budget so we see how much we got to produce. And then once we do the production budget, then we can do raw materials. We only got one, and the labor. The overhead is independent of those calculations. The sales budget, we simply gonna, that's independent. We're gonna look at the sales. And then administrative expenses, that's independent. Once we calculate those, we'll be done. So Tara is gonna lead us off with the production budget, showing us how much is produced. And the top line on the production budget is what?
I gotta correct my numbers. Is the sales.
And where do those numbers come from?
They come from the quarter one, the budget.
Sales budget. So 74 were the sales, so we got to reduce 74. So when we get to quarter one, we got to 74. Okay, if you're gonna sell 74, then you got to make 74. Any question on that? So we got to make 74, but we also want to make what, Terrell?
What you mean?
We don't want to just make 74. We want to have some inventory for next semester.
Okay, yeah. So we gotta have something for. Okay, okay. I'm not gonna reiterate what you're saying.
First semester, quarter two.
Right.
So what's gonna go in that second box?
Well, we're gonna use the information from the first one, right? On quarter one, we were trying to lose 100,000. Right.
No, you got you know you have to go all back there.
So that quantity that we got from there, right?
No, you ain't got to worry about that. You got 74 that you selling in quarter one, 147.
50% of the 74.
You want 50% of quarters two produced in quarter one. As you don't run a company producing it when you sell it, you're gonna have some already available. So we bring down the sales and we look over here at quarter two, we want 50%. So how much is 50% of 147?
37.
Oh no.
Oh, you said 140. I thought we were doing it for quarter two. My bad.
73.50.
So let's just make it 74.
Okay.
All right, so we're gonna make that set.
Put
All right.
74 in, Terrell.
Oh shit, I didn't know I had control.
Yeah. So your total needed is what?
147. Are you asking like, is that like asking like total needed to reach our desired goal?
The total need is how many you making for this quarter that you're gonna sell, plus how many you need for the next quarter.
Oh, so 74 and 74 is, and no, 74 and 140 plus 147, right?
No. You were saying 74 plus 74.
So it's the amount that you need for this time plus what?
Percent of what you need for next time.
So 74 plus 74.
Mm-hmm. So you were going all around John's barn, going back to the assumptions and everything. And you didn't have to do any of that. So what's the total need?
147.
I don't know if that's 147 or not.
Well, we're using 74 to be 148, but
I put you 148 in. Can you do that?
yeah.
Okay, you don't have any beginning inventory, so 0 goes in that box. So you're going to produce 148. So we produce what we're going to sell plus half of what we're going to sell next quarter. So we have some inventory on hand the first day of the quarter.
So the units to be produced is the same as the total needed, minus the beginning, plus the beginning.
Yeah, I guess total needed. Yeah.
Going forward, but well, for one, it won't use because we didn't have no so it'd be the total needed plus the less beginning inventory.
Right.
Is that how we going forward?
Right.
Okay.
Okay, Angela.
Okay. I can't, it's not showing where I could grab it.
What you gonna do?
Okay, I'm gonna bring down to 148.
Okay.
She's doing an ink budget. Yeah.
Mhm.
Only got one raw material, ink.
Okay, and it says per unit requirement. Would that be 40 from the assumptions?
It's how many it takes you gonna put it in. I don't think it's 40.
Okay.
What's the per unit requirement? We had it takes probably 2 or something like that. I don't think it's 40.
I thought it was 4.
Is it 4?
Oh, okay, 4. Okay.
Hold on, I'm about to double
Okay.
check. I'm going to double check.
Okay, let's see.
2 units at $20 a piece.
How
So
many
how many-
units?
It's 2
how
units at $20 a piece.
2. Okay.
All right, so the per unit requirement is 2.
Okay.
So if the book needs 2 ink cartridges and you're making 148 books, how many ink cartridges do you need?
296. Oh,
Okay.
wait. What? Oh, okay.
You're right. Don't backtrack.
Okay.
And what's the
Okay.
cost per cartridge? Wasn't it $20?
Okay.
Yeah.
So you got about 296 ink cartridges. They're gonna cost you $20. So what's your total cost?
5,920.
Oh, 5,000.
Huh?
Is that 5,000?
No. 5920. Wait,
Okay.
296 times 20, right?
Okay, I guess it is. How much?
Okay. 296 times 20. 5920.
Okay.
50.
So hold on. Wait, I missed something. Oh, so is that 70%? Hold on, because I'm messing something up.
I know what he's talking about. That's what threw me off too. That 730, whatever we started off with.
Right.
That's for the whole year. We're just on the first quarter.
Okay. So that
Payment
5,
in month of
that total cost
Do
what
you
was
bill for the whole year? Or do you pay your rent monthly?
yearly? Hey, real quick, the total cost was the sum of what? It was what
So I
times
got
what?
the total cost. Somebody got the total cost, Angela?
4,440. And what I did was
That one now you
I
got the
didn't get
5920.
the 5920 was the 296 times 20. And what I did was I took 75% of the 5920, and that's how I got 440. Well, $4,440.
Because that's what she's gonna have to pay now. She doesn't have a prior month, so put a 0 in here.
Okay. And then just
And-
bring down the 4,000.
Correct.
Oh, sorry.
Okay.
But usually it would be
Now put the 0. Put the 0 back. Put the 0 back there.
What? Huh?
Put a 0.
Oh, okay. It's the next box. Okay.
Next box.
Okay.
he's being facetious.
Okay. Then Angela, we're gonna take the 4,440, and we're gonna come down here to the cash budget, and that's
Okay. For the ink.
the first payment we're gonna make. So
Okay.
right here, now we got the receipts. Now we're putting in the disbursement. 4,440.
Okay.
Babinski, you ready for the labor?
This is so funny because this is the only shit I've been using all summer. So at my internship, Professor Boyd, so I was in the finance department, so the accounting department, they would send these documents completed to us to move forward and what we were doing with the pricing.
Okay.
That's-
So now you see.
Now I know what the numbers where they were coming from, because I didn't know. It was just a whole Excel document with a whole bunch of formulas typed into them.
Mm-hmm.
It's pretty cool.
So, Rubinsky, you ready for labor?
Yeah, I'm ready.
So you're gonna take that same 148 and put that on your top line for labor. Put your 148 there, the same number. Because now you got to. So how many can they make an hour? How many books can be made an hour?
4.
Let's put a 4 on that line there. Per unit requirement is 4.
I'm gonna go double check that because I don't know if that's true.
It's 5
At least
books.
I told the truth up front.
4.
No, it's 5.
You
Make
said
it 5.
5. All right.
That's why.
Okay, so
Oh, do I let's see.
if you got 148 things to be made, and you can make 5 in an hour, how many hours you gonna work to make them?
So that'll be 147 divided by the 5.
Yep. Oh. Let's just about 150 by 5. What do we get?
150. 30.
Okay, put a 30 there. What's your labor rate?
It was 8.
$8.
$20 an hour. Remember what it was? $8.
It'll make $8 an hour.
Yeah.
All right, so we're gonna multiply labor hours 30 times 8. So the total direct labor is how much?
240.
240. So put the 240 in there. Then we're gonna take the 240 and put it on the schedule right here for labor. 240.
Okay.
All it takes. All right, so we're ready for manufacturing overhead. What is the total manufacturing overhead?
I think it's 100,000.
I will put the 100,000 there. How much depreciation? Because that's not a cash expenditure.
I think it was 10,000. Depreciation, yeah, 10,000.
Okay. So put the 10,000 in there.
Professor Boyd, these numbers coming from up top, correct?
The what?
These numbers are coming from up top, right?
From the assumptions, yeah. And so your total payment is going to be what?
110. But for the 100,000, would it be like 25,000? Because 100,000 is like for total all 4 years or all 4 quarters.
25,000.
Maybe 20. Oh, okay. So you just break up the.
Right. You break it up evenly.
Oh, it's divided by the okay, for each quarter has a certain amount.
Yeah, it would be, and it's in the assumptions.
Yeah.
And how's the depreciation? Is it broken up?
No, the depreciation is 10
Okay.
for each quarter. So you just add that up, right?
No, you don't add it.
Or subtract, I mean.
Yeah.
So 50,000.
depreciation is not a cash expenditure. And so when you're trying to figure out how much you got to pay, you're only paying $15,000. So now we got to take the $15,000 and put there in here for overhead. $15,000. All right, Dash, you ready for those selling expenses?
Start me off, please.
How'd you are? What's top line here on selling expenses? What's this line? That's sales.
Yeah, sales. I'm looking for it.
Go back to the sales budget and get the sales for the quarter. How much were the sales?
74.
They were 29,600. That's
Wait.
the
Total
the
sales. Sorry.
29,600. So we're gonna put the 29,600.
Wait, which one are we doing, Professor Boyd?
Sales, selling expense.
Okay.
So put the 29,600 there.
What?
What was our selling rate? What's our selling commission rate? What did the assumption say for selling expenses? What's the rate?
What, before we get to that, what, this sales, is that per, is this actually gonna be all per assumptions?
The sales, we just go up to the sales budget. If we sell 29,600, the salesmen want a commission. They want to be paid. They, like you, they want to be paid.
Is it
They get
that
yeah.
$400?
10%.
They want 10%. They made the sales, pay them their money.
Who do they think they are?
Where you'd be if you sold $29,600 worth of stuff. So you put it on this line right here, Dash. How much the salesman gonna get?
2,960.
Okay, that's all it is. Put 2,960.
So just for my formula's sake, so we are doing the
10% times 29,600.
the
You can
sa-
go back.
the sales times times the 10%.
Correct.
Is it, and that's per the assumptions, right?
For the assumptions.
Okay, yeah, because
Everything is per the assumptions.
okay, because I'm while I'm keeping it along, I'm not changing the numbers so they can be familiar. I can be familiar with them, and I'm putting the formulas in place of that. So I'm trying to do it properly.
So there you go, Dash. Put in your number. And we got one number to go, Sabu.
Yeah. Administrative expense,
It's total amount per quarter.
50,000.
So put a 50 in there. What's the depreciation per quarter?
That'll be the same, right? 10,000.
Is that what the assumptions say?
Yeah.
Okay, put it in. So your payment is gonna be 40,000. Always subtract depreciation.
Wait, Professor Boyd, the total expenses per the assumptions, right, from up above. But
Correct.
why is it that it's what percentage of that?
It's just standing in the assumptions. So we go to the assumptions.
My assumption has they're listed as 200,000.
Let's see, administrative. Yes, but it's 50,000 a quarter.
Yeah, that's what I'm asking. Is it about a quarter or was it,
About a quarter.
okay.
So you don't have to pay for the depreciation. So your cash outlay is only $40,000. So let's go ahead and put that on our budget. Administrative expenses, 40,000. All right, so what are our total payments? Can somebody add those up?
I'm trying to find.
It's 1, 2, 3, 4, 5 numbers. Can you add them up?
Would it be 62,640?
I'll take your word for it. Put it in.
Wait, Professor Boyd, I think my charts are missing some stuff and it's going to mess me up.
So your cash available is 111,840. Your payments is 62,640. So you have excess cash of what?
Hold on. I'm missing something. Oops.
You had 111,840. You
40,
paid out 62,640. How much did you have left over?
49,200.
They put it in 49,200. Do we need to borrow anything? Well, we know that our minimum cash has to be what?
100, negative 100,000? 100,000?
1,000. It's cash now. So let's put 100,000 in here.
Will we break that down up per quarter too?
Yeah. No, that's a different number.
Okay. So that's going to always be consistent.
Yeah. Well, it doesn't have to be. So let's put the 100,000 in there.
It's already right there. The minimum is,
But it needs to be in this box now.
okay. Well, who putting it?
So if we need 100 and we only got 49,200, what do we have to borrow?
50,800.
50,800. Put the 50,800 in the box.
Sandra, you can put it in.
Oh, good.
Oh, Desmond got it. Okay.
You said 58,200.
No, 50,800.
50,800. Any question on what we did?
With that, no.
With that, no?
Not with that.
Okay, and then we would bring the 100,000 up here because that would be our beginning cash in Q2. Now,
So we would borrow that money in order to use it for our next quarter.
yeah, we have to have that much in the bank.
Okay.
All right. You all's job individually now is to start with the sales budget, Q2. Let me even take this out. Y'all completely doing Q2. You're doing the sales budget. Then you're gonna come down and do the production budget. Take this out. All right, so get to work. Start with your sales budget and go all the way down for Q2, all the way through.
Professor Boyd, real quick question. So you said that, so how do we get the less beginning inventory for part 2? We didn't go over that because it didn't have one on that last one. It was just 0.
The desired ending inventory will become the beginning inventory in the next period. So I'll put that in for you.
How do we find that now?
Ending in period 1 is the beginning in period 2, and you already got it. So just crisscross over here.
Wait, say that one more time for me.
The ending, your ending balance on your bank statement on November will be your beginning balance on December 1. So whatever you have in there on November 31st becomes your beginning balance on December 1st. Got it?
Yes, sir.
Okay.
Thank you.
Anytime. Good question. So start here with the receipts and go all the way down.
Back up. Professor Boyd. Oh, he walked off. Hey, do any of y'all know how to do the payment in the month following the purchase for Is it the same as we do it up top for the ink budget? Is it the same that we do it up top? Am I making sense?
You
Are you
mean
talking
the
about the cash
collection?
budget?
So under the raw materials ink budget, doing the payment of the in the following month purchase,
Is it 25%?
I'm asking. Is it the
Yeah,
same
but
as,
what's the percentage? What's the percentage for the payment in the month following the purchase?
I don't know, that's why I'm asking.
He should have gave it to you. It should be either 75 and 25 or
Is it the same one that's in the sales budget and the cash receipts?
no.
Let me re-ask that question. Is it the same percentage time that when they do the collection of the first month after sale?
You talking about is it the
The time that same
40
percentage?
the 40% and the 50%?
Up underneath that. So up when we did the sales budget, in the sales budget, right? When you look at the sales budget for the collection of first month after sale, it's the credit sales times the 50% to get that number for part two.
Quarter
Yeah,
two?
you do that, but you don't use those same percentages though. It should be different percentages.
Oh, I see what you're saying. Okay.
Yeah, like I don't think it should be 40-50.
No, I'm saying, well, we did it there was just times 50, but I see what you're saying. You're saying it should be per the assumptions.
Yeah, right. But what you're saying is right.
All right. Thank you.
You're welcome.
What's going on with this thing? Oops. Wait, I'm still not getting this right. And it's confusing the fuck.
What is your question? What's your question?
So I'm simply just trying to find the payment in the month following the purchase for the raw material ink budget.
Okay, so let me see. You trying to find this right here?
Where are you? Payment and month. Okay, yeah. So I'm trying to find the last one. That's it. Is it just 75% of what number? Oh, it's 25%. No, it's that. It's the one down.
I don't got control no more. Okay, hold on.
let me take control real quick. I'm trying to find this number. That number.
And you have to do quarter two.
All right, I have that part. I'm at this part, the payment in the month of purchase. And I'm trying to see
Okay, so
what numbers am I supposed to multiply, divide by to get.
to get the 25%.
Right.
Okay.
So I was thinking it was the total cost from quarter one. I mean, from quarter two times that 25%, but I'm not sure if that's if that's correct.
So it's supposed to be, hold on. So it should be, hold on, let me go to my original letter.
Okay.
It should be what's subtracted from the first month. Oh, okay, let me see. So 5,920 should be subtracted from 4,000. Well, 4,440 should be subtracted from 5,920, which will give you that number.
Okay, so it's 25% of that number. Got it.
Yeah.
Thank you so much, because I was over here wrecking my. And that's what I did, but it was wrecking my brain to know if it was right, because I didn't want to keep going, and then at the end of the day, my final number I get to is gonna be wrong because I went through all this stuff and did it wrong.
Yeah, because you make one mistake, you gotta do the whole thing over again.
I'm gonna be mad. I mean, furious. Go ahead and do this before I forget that. labor that I'm dropping down. Let's see. Hey, real quick. So the manufacturing overhead chart, is it going to be the same for all 4 quarters?
So what?
The manufacturing overhead chart? Hold on, let me
Yeah.
see. Let me scroll down real quick. This is so difficult. All right, so this chart,
Yeah, it's the same.
it's gonna be the same across every year.
Yeah.
Okay.
25,000
Stupid.
and 10,000. It's gonna be the same number, 15,000 at the end at the cash budget.
Okay. Okay, so it's gonna be the total payment gonna be 15,000 each time. Okay. Muchas gracias. Excuse me. Okay. Hey, Professor Boyd,
Yes,
can I borrow control for a second?
I thought y'all had the control.
It gave it to you a second ago.
All right, let me see here. You have it now?
No, I don't.
Control. Stop now. Try it now. Still not coming up.
No, sir.
What about now?
Nope. I'm definitely gonna use my Excel document. All right. Well, instead of doing all this, would you mind just scrolling down for a second, Professor Boyd, for me, down to the administrative expenses?
All right.
Yeah, no, try to take it again.
Scroll down to administrative expenses. Here we are.
Now, so the total expenses came from where?
The assumptions.
And then you just find the difference between those two.
Mm-hmm.
So which set of, wait, hold on. Total expenses. Oh, it's a quarter of the total. Okay, I see. It's per quarter. Okay. No, it's not. What assumptions are those coming from?
Let's go up here and look at our assumptions. Quarterly sales, selling price, bad debt, collections, desired in the inventory, ink cartridges,
Oh,
payment,
okay. That's why I couldn't find them.
total overhead, depreciation in it, administrative expense. The fixed costs are gonna look like this.
Yeah, no, I was having a hard so I'm using the Excel document, right? And so I was having a hard time finding that because it's not what you sent us to look at the problem. So it's not on here. It's fine.
Anybody finished yet?
Well, as soon as I do this, I'll be finished.
All I want is the bottom number.
So that's going to be the same. That truck's going to be the same as well, all the way across.
Mm-hmm. Trying to get this excess number, whether you borrow, and what's your ending cash balance. That's what I want at the end of the day.
Scroll back up to the. Oh, wait,
Oh,
I
you
got it
got
now.
good. You got
Come on. It moves so slow. So, Professor Boyd, so looking at the total payments, that is just going to be what's the total payments for in the cash budget is the sum of the overhead expense, the selling expense and advertising expense and the labor expense?
to be the sum of everything, depending on what you have from disbursements. It's just like you personally.
Well, I'm looking at the first one. I'm looking at the first quarter right now. I'm trying to figure out how you got that 62,640.
Did you add them up? I just put down the number somebody gave me.
What numbers are you supposed to add is what I'm asking.
All the disbursements.
Oh, okay.
1, 2, 3, 4, 5.
One, two, three, 4, 5. Oh, the selling expense. Duh, Terrell.
So you don't have them all in there.
Why did I miss that? I thought I did that. Okay, easy there. Yeah, okay, that's about right.
See.
Yeah. Last question, Professor Boyd. Pinky promise.
You promise?
Looking at the first row still on the first quarter, I mean. If I can just move when I ask it to. So the excess cash available is the difference between how much we spent and the total amount, the beginning balance.
Yep. Well, available. What's available?
Oh, it's the available balance. Okay. Okay, yeah, I get it.
Anybody had excess cash yet?
Give me 1 second. I'm gonna give it to you. So that the receipt of the long term is how much.
Says short term.
Hold on. So that short term, so the short term, that is just the difference in what you spent from your excess cash.
Say that again.
The short term receipt is how much that you spent to get to that $100,000.
Yeah, if you need to. It's how much you borrow so you can keep 100,000 in the bank.
So, okay. All right, I got a number, Professor Boyd.
What is your number?
Hold on, I'm trying to scroll down a little bit more. Can you? Okay. I got. You want the ending cash balance, or you want the which one were you asking for?
The excess first. Give me
The
the
excess.
number goes in here.
I think the way that y'all are gonna calculate is gonna be 68,100. But I'm just gonna give you, because I'm not rounding. I got 68,100.
Y'all,
Huh?
however y'all do it.
Yeah, I got 68,188.
Anybody else got that?
So, Professor Boyd, a question about the minimum account balance. Do we use that same one each time?
That the bottom number's got to be at least 100,000.
Will it ever change?
Well, you have to check the assumptions. Sometimes it's 200.
Well, I mean, like once you find it for that one, it's going to be the same all the way across. Is what I'm asking.
No, changes. Depending on, does your money stay the same each month?
The income, yeah. Deductions, not so much.
Professor Boyd.
Yes.
Can we go all
Yeah.
the way back to the production budget?
Well, we got the Terrell, the expert who's on production.
I missed the steps, so I believe.
Did y'all get this done? Well, fill us in first.
What?
Sales budget. I took those
Oh.
numbers.
Oh, okay. Okay.
Professor Boyd,
Yes.
once we get through with this problem, will you be answering questions about the project?
Mm-hmm.
Okay.
Well, you can ask now. They can turn their mics down or their speakers down.
Okay, because I'm just a little confused on how to do the raw materials budget
Just like
and
just like problem. What's the difference?
well, the way we feel, okay, so the actual direct material on step 2 of the project, where we have the chart with the amount required, the per unit cost, and the total cost,
Mm-hmm.
how do we make it into where we do the assumptions, where it be like 4 ink cartridges per book plus the unit cost? How do we do that?
Just put everything on a. Okay. Which one are you talking about?
For my project, we did the juice. So we found out that the total cost is gonna be $8 for all of the ingredients, to buy all the ingredients needed.
Okay. But just like we had the paper and the ink, we had 2 ingredients on the book.
Oh, so I need to make 5.
Yep.
Okay, and then the unit cost, is the unit cost the unit price, or the unit cost is the $8? Or is the,
Add up to 8.
oh, so we basically doing the total cost is basically how much it costs to make that one.
Mm-hmm.
We have to do that 5 times.
Mm-hmm.
Okay, and then my last question is about the manufacturing overhead and the administrative expenses. So you told us to use that same number for year 2, year 3, and year 4.
That's fine. Yeah.
Just use the same number?
It's the same number.
But Professor Boyd, that's gonna throw off the numbers for the master budget, because you know that's
You can
in.
use any numbers you want, whichever ones you want. If you've already used some, that's fine.
Oh, okay. So we can just still use that same number for each quarter.
Yeah, if you want to.
Okay.
Since it was late, I was just trying to make it simpler.
Yes, sir.
Okay.
Thank you.
You're welcome. Taking a mighty long time. So did we get these numbers on the sales budget redone? Well, what's this number? Angela?
I'm sorry, what did you say?
What's this number?
147?
How'd you get 147?
How did I even get 147? My brain is mush right about now. What did I do? 20% of 400? No. That's when we did the 735. So was it 20% of 735? Let's see.
Yeah, see it work.
Yeah, 20% of 735.
They give you how much?
147.
I was at 140. We just round to 148.
148, okay.
What's your total sales gonna be then?
It's gonna be, hold on, 148. 59,200.
Is that what we had before, Tara? Yeah, well, Tara,
Oh, I'm sorry. I've been mute this whole time. I've been trying to talk.
We had 58,
Yeah.
800 the first time.
148 or 147 for sales.
For sales, I used 147. So yeah, 148 was what everybody else used.
Okay. So what's 400 times 148?
59,200.
And all of that's credit sales, right?
Mm-hmm.
10% is what? Bad debts?
Mm-hmm. Which is 5,920.
What our collection's gonna be?
Hold on. I gotta redo that because I got 23,520, but I think that's the wrong figure. Let's see.
40% on 59,200.
Times. Okay, it's 23,680.
Oh. What comes here?
That's when we do 50% of the, is that the 29,600?
Correct.
Okay, so. Okay, so that's 14,800.
So what about total collections?
Let's see. Is that, did you tell us we
Add them together.
we add? Yeah, we add. Okay, so hold on. Plus 23680. 38,480.
How much?
38,480.
38,480. Then we just simply take that down. What's it? 38. Type it. paste it in here. It doesn't matter that much. All right, you all were supposed, so we got now 138,480 available. So you all supposed to be filling in 1, 2, 3, 4, 5 numbers. Weren't you asking about the production budget, Angela?
Yeah. Let's see. Hold on. Let me save this. So
What number are you on the production budget?
let me see.
We're gonna simply reach up here and get the sales number 148.
Mm-hmm. And it's going to be 148 plus 74, right?
No. We
It's
now
not.
got this third
148.
quarter. So in the third quarter, we're selling 220. And that was
Okay.
the third, 220. So we got to
Okay.
produce 50% of these. And that's going to be what? 110?
Okay.
So
Because that's
you-
half of the 220.
yeah. So you need
Okay.
250.
Okay.
But you already have
And minus
produced
74.
for last time. So you subtract
Mhm.
7 from 258, and how much do we get?
Okay. Minus, what is that, 74? Okay, 184.
184.
Mm-hmm. It's, yeah.
184. And the 184 is going to come here.
Mm-hmm.
184.
So,
Wait a minute. Where's labor at? The 184 is going to come here.
mm-hmm.
Okay.
Okay.
All right, well, y'all got to put something in. It's time me to eat after a while.
Right? That's why I can't think. I'm sorry. Okay. Go up.
So we said that we were
Okay.
making 184.
Mm-hmm.
The per unit requirement is 2. What's 2
Mm-hmm.
times 184?
368.
How much?
$368. $368.
368. Unit cost, that stayed the same, 20. So what's 20 times 368?
7,360.
7,360. We're going to pay 75% of this. 75.
5,500.
How much? 5,000 what?
520.
Oh. Now we got to go back in here and pay this money from last time that we had last quarter. We paid 75%. We got to pay the other 25% now. So we buy and we pay 75% in the quarter of, 25% the next quarter. So what's 25% of 5920?
1480.
1,480. We add those two together. How much is that?
Plus 5,520. $7,000 even. Is that right? 5,520 plus 1480. Yes, $7,000 even.
Copy it. Then we come in here and put that in here for the ink in terms of, put it the wrong place. Take it out of here. Now, let's see if we can do direct labor. 184 per unit requirement is still 5. So what's 5 into 180?
What? Oh, 36.
All right, 36. So we got to work 36 hours. Labor rate, $8. That doesn't change. So what we're gonna pay them? 8 times 30.
$288.
How much?
288. 36 times
88.
8. Right.
That's a big name. We copied it 288. We just put it right here, paste it in, 288. Now guess what? Main factor overhead is gonna be the same.
Good.
Administrative expenses, since they're fixed, they're gonna be the same. Okay, so they're gonna be the same all the way across. So you didn't have to do anything. Then we need to get these, see what the sales were. The sales were $59.20. Copy that. Where we gonna take it to?
Hold on,
Selling
cash.
expenses.
Oh, sell expenses. That's what we're going to. Okay.
And we know we paying them what, 10%. So the commission they want us what? 5,920.
Mm-hmm.
We copy it. Then we paste it. We all done.
Okay. Yeah.
Can you add them up?
Hey, Professor Boyd, I have to leave, but could you upload this today so I can look at it or watch it over?
Okay, the video.
Yes, sir.
Yeah, we're about finished. We're gonna finish this, but you all need to finish the problem. And on Wednesday, we'll
Okay.
work.
So I guess.
So we'll meet at 3 o'clock on Wednesday.
So
All right.
I'll upload
the
this.
total is 68,000. Okay.
What's
Professor
up?
Boyd. Professor Boyd,
Yes.
before we're done today, is it possible that that I can share my screen and you can kind of look over my numbers for my formulas for me to make sure I'm doing the right stuff?
Okay. So I put it in there. Who has to? Oh, Angela's putting it in. Good. Go ahead, Angela. And how much cash did we have? I got might be too many zeros in those payments, too many digits. So what's our excess available? How much we got to borrow this time so we still be at 100?
Are you talking to us, Professor? Who are you talking to?
Somebody's writing it in.
Oh, okay. I can't see it because I'm working on my screen.
Oh, Angela was doing it. So we know the bottom number's got to be 100,000. So how much we got to borrow? All it is, you got to borrow 29,278. Then you'll take that 100,000 and put it up here. Okay, so you all finish this up. I'll put in a link for you all to submit it. Then we'll start on, we'll do a new one to get y'all ready for the exam. We'll do it on Wednesday at 3. Okay?
Yes, sir.
Boy, dedicated professor.